Okay, we are recording. Welcome. This is Mike Durr, the Kingwood Mortgage Guy, and we've taken off a little bit this summer on our homebuyer Webby presentations, only because we've been pretty darn busy. And the good news is that we're still busy, but this is something that I thought was just critical that we get out right away. One, I'm thrilled to announce that Gabe Winslow is now he's joined the Kingwood Mortgage Guys, and he brings a wealth of knowledge and expertise in not only title business, but as a fully certified attorney. He's given us the opportunity to talk about things that we never really talked about before. Now, I want to put a disclaimer on that, is that we're not giving legal advice. We are talking about mortgage stuff, and anything that's in this presentation, if you have any questions about it, we encourage you to call us. That's what this is all about. But with that being said, we are tackling a subject that's a tough subject this week, and mainly because we see this on a consistent basis. But first off, I'd like to introduce Gabe Winslow. And Gabe, thank you for being with us, and man, we're just excited about you.
Thanks, Mike. I'm really excited to be here, and this is something that's kind of near and dear in my heart. A lot of people wouldn't think of divorce as something that you'd say near and dear to your heart, but having gone through it, having seen how difficult it is and how emotionally scarring it can be, the idea that we can help someone kind of simplify their divorce process and make a good decision with what's oftentimes the biggest asset in that coming out of that marriage is something I'm really excited about.
Good, good. Well, again, hopefully this will be a blessing to somebody. And again, there's a very good chance that this has nothing to do with you, but you may know somebody that this information may be important to. And that's really what this is about. We want to just discuss this. So we are going to move through the presentation. I like to do these quickly because I don't want you to be stuck in front of a computer for an hour or two. So we're going to try to get through it very fast. So first thing I always do is, okay, we always like to say that we are the Kingwood Mortgage Guys, and you can see Mike's smiling face, and of course we've got a picture of Gabe there, but the key thing is that we want to make sure that you have the way to call us, and you can call us at 281-348-9899, and we have our extensions there. Of course, you can reach me with my email, or you can just get me any way that you want me to. But Kingwood Mortgage Guys is the website, so we'd love to hear from you. And again, we just want to let you know that we're here for you. So here's what we're going to cover in this presentation. We've got 10 questions and answers to help you with your home and finances before, during, and after your divorce. So I'm going to set this thing up, but really it's going to be Gabe that's talking about this. But I'll ask the first part. I'm filing for divorce. What in the heck should I do first?
Well, Mike, the first thing you're going to need to do is you're going to need to have a good idea of what it is you own, what it is you owe, and what it is that you owe, how long a period of time that is for. So what you need to do is you need to collect all your bank statements. You need to collect your retirement accounts, your information, pay stubs, any all paperwork related to other assets owned individually or jointly. You need to know, do I own the car? Do I have title to my car? Do I own the house? Do I have title to the house? Am I on title? Do I have any kind of ongoing debts or obligations? And a lot of times in marriage, one person handles all that financial stuff. We see that a lot. And the other person just doesn't know where to start. They don't know how long their car payment lasts for. They don't know what the interest rate on their house is. They don't have an idea of how much money's in the bank, quite frankly, a lot of times. So it's really important to figure out sort of what's going on. And I think that gets to a point in time where we can help a lot. And one of those ways, of course, is to run a credit report.
Credit report, yeah, that makes a lot of sense.
So, then you at least can, between your bank statements and your pay stubs, you can know how much money you have in the bank and how much you make and what you owe, what you're responsible for and what will be an ongoing responsibility there.
Well, let me ask this question, because if things have started going rough and you're in the early process of, or maybe the initial process of considering a divorce as an alternative, which we think is a bad alternative, and we want
Sure.
to follow God's law on this. But I mean, there are some times when divorce is really all it is. But what if there's a hint that somebody, the one that's normally taking care of the finances, might be moving things or hiding documents or something to that effect? What would be a good defense against that?
Sure. I mean, it's really hard with the. It's really hard if you don't have any of that information. So the credit report sort of can tell you whether or not they're taking on any ongoing obligation, either in your name or their own name if they have the Social Security. If you have the Social Security number and you can run one on your spouse. As far as assets go, and you need to get with your bank and you need to see, hey, is that paycheck going in there? Is that is there anything odd coming out of the account that I can't really tell what's going on? And quite frankly, once you file, that's a criminal act to hide assets at that point in time. And before you file, for example, in Texas, it's a community property state. You can put that money in a bank account with your name on it, Mike. But if you're married, that's still your spouse is going to own that once it gets around to being found. And that's one thing. We talk about working with a trusted professional to help you make sense of all the information you've collected. We're pretty good, I think, with helping people see what their obligations are. If you have a high asset, high net worth case, that might be the kind of thing that you need to get with a forensic accountant or something like that. If you really feel like they're transferring assets out of the marital estate and into their own name.
Yeah, that's one thing I want to point out very clearly here, that we're not acting as divorce attorneys or any kind of attorney. We're just trying to give you some advice, particularly that's
Sure.
related to real estate. And of course, getting documents together is the same thing like you were documenting a mortgage file or your tax returns or anything like that. It's the kind of information you want to know. And what Gabe's telling you is just you got to get your act together. So let's move on to the next one. I think we could probably talk about that for a long time, but we don't want to do that. But here's the deal: is I want to stay in my house. What do I need to keep in mind, because I want to retain ownership of the house?
Sure. I mean, this is really a pros and cons. This is really something you got to weigh the pros and cons and see, whether or not it makes sense for you. The first thing you need to look at is, can I afford this house? And what you're going to do there is you're going to look and you're going to see, how much is owed on the balance of this house? What's my monthly payment? But it doesn't just end there on your monthly payment. You also have to look at, what's my homeowner's insurance? What's my taxes? My real estate property taxes. Do I have a homeowners association? How big is this house? Now that I'm going to be a single mom or a single dad, am I going to need a maid, or am I going to need lawn service? Or, how old's the roof? How often do I probably think that I'm going to have to put some money in that house? I think I heard someone say that you should probably put 1% of the value of your house into maintenance every year. So, if you've got a $300,000 house, you just need to look at, hey, there's $3,000 that might come out of it for maintenance above and beyond what I'm talking about. That's stuff like fixing your air conditioner, or fixing your heater, or your stove goes out, or you need to make some landscaping improvements or anything like that. So you need to really consider the financial responsibility that you're going to have associated with the house now that you're a one-income household instead of maybe a two-income household. That's going to be a big difference. But your pros, of course, on the other hand, are, you got kids. They have friends in the neighborhood that might be close to your church. That's definitely close to your school, because we go to schools in our neighborhood. Do you want to sell and disrupt your kid's life? What kind of emotional, memories do you have in there? Do you have the...
Well, I don't mean to interrupt you, but
sure.
One of the things with the premises is to keep it short. And we want to go over all those things.
Sure.
But for the people on the webinar, we want to just tell them that there's a lot of considerations that they need to go through. And a good thing that we want them to do is we want them to call us so that we can go over them individually with that, because there are probably going to be some people that are listening to this that are not going through that, and so anyway, that I didn't mean to cut you off or anything.
Oh,
like
no,
that. Those
no,
are all
by all
great
means.
points.
By all means. Yeah, so once you decide that you do want to stay in the house, then you need to figure out, how much that house is going to cost going forward, and then you need to get a mortgage on that house.
Right. Okay. So next one, money. How do we split the equity once it has been determined, and how much equity exists? So first off, how much equity is in the house? Who do you get to help you with that? And then how is that split up?
Sure. So pretty simply, your equity in your house is the cost that your house will sell for, minus any closing costs and minus any mortgage that you owe on the property. So, in order to figure that out, you need to talk to a professional and figure out how much is that house worth. Everyone that owns a house has a tax valuation, but I'd be a little bit leery of going directly off that. That's just the appraisal district saying, how much they think the house is worth. We obviously work with appraisers and stuff like that. We can get you appraisal for about $500 probably.
The main thing I wanted to talk about that a lot of people don't know about is the OLT lien, and
Sure.
I think that's kind of a unique thing in Texas. Texas is kind of a funny cash out state, and the OLT kind of brings some potential healing to this situation.
Yeah, so this is really good. Say you figure out your house is worth, just let's use real round numbers, $100,000, and you owe $60,000. And you talk to a real estate professional and you decide it's going to cost you about $9,000 or $10,000 to sell the house. Let's just say $10,000. Use real easy numbers. So that would be $10,000 minus the $60,000 you owe minus the $10,000 in cost off the $100,000 price. That would leave you $30,000, right? So if you're deciding to split up, he gets $15,000 and she gets $15,000. One of the easiest and best ways we can do that in Texas is we can put what's called an OLT lien in place. And what that is essentially that's not taking any cash out of the mortgage, but that's just giving the other party that's not going to stay in the house a sort of the functional equivalent of a deed of trust, right? Saying that you owe them $15,000. And then what happens at that point in time is we can go and we can refinance the house for, say, $75,000, pay off the $60,000 underlying debt and the $15,000 that's owed to the spouse. They'll release that lien against the property. You're out of your old lien, so that you've got a new lien in just your name, and you don't owe any equity according to the terms of the divorce decree anymore.
I bet that there's not many people in the mortgage industry that even know what an OLT loan is, and I bet you that the number of those done in Texas are minimal, just because you have to be with a pretty shrewd guy that understands both the mortgage refinancing characteristics and the fact that you can do an OLT loan. And that's just my guess.
And one other thing is you can also get your divorce attorney involved in that as well. A lot of times they can pay, through a refinance transaction, you can pay your divorce attorney. They can put the lien on that house as long as they had something to do with the home financing. Not the actual financing, but as long as the house is considered part of the asset in the divorce settlement, you can also get them paid. So if you don't have the cash flow to pay your attorney necessarily right off out of existing cash, because divorce is a very expensive time. There's a lot of people that are performing services for you that need to get paid. You can roll that into the equity of your house and also not make that a cash out refinance.
That's great. Okay, let's move on to the next one. Will I qualify for a mortgage? Well, this is not so much a legal question as is a mortgage question, but the bottom line on this one is that the way people qualify for a mortgage today is the same it is if you're buying or if you're refinancing. It's about your income, it's about your debt, and your debt ratios, and your credit scores. And so obviously we would love for you to call us. There are some little subtle quirky things that happen when you share joint debt, and I do personally think it's a good idea. This is not, a biased view because I'm in the mortgage industry. I think that anytime you own a property and you're not staying with somebody, that it's a bad idea for you to have a separate owner somewhere else, living somewhere else, doing something else. So that's all I'll say about it. If you have any questions, obviously, want you to call us. We'd love to talk with you about your specific situation, and that's what this is all about, is just kind of opening up this dialogue. Do you agree?
Absolutely. You know, you've been the Kingwood Mortgage Guy longer than I have. I'm receptive and excited about the opportunity to come in here. Yeah, if they've got a legal question, I've got a lot of experience dealing with that. And obviously on the mortgage side, you know, Mike's my subject matter expert. He's the guy I look up to and I go to for advice, and yeah, I think they should absolutely give us a call.
Thanks for that, Gabe. Okay, so what if I'm the one leaving the house? How will that affect me?
So this is really, really important, and more than just the people that we're talking to that are trying to stay in the house, I'm talking to you too. If you do not make that house get refinanced or sold as part of the deal in the divorce, you're really, really opening yourself up for a lot of potential liability. The reason for that is pretty simple. Even if you deed away the property, all you're doing is giving away your ownership interest in that house, right? If you signed at the time that you bought that house, if you were on the loan, then you told the bank that you were going to pay them back, and a divorce decree does not, relieve you of that obligation. That will be something that will follow you around forever until that loan is gone. It'll affect your obligation as far as a credit ratio when you're trying to apply for a loan, when people view your debt to income ratio. If that doesn't get paid on time, then that'll affect your credit score. That'll get you a 30-day wait if your spouse doesn't pay on that. You're giving your spouse a ton of control and a ton of effect on your life, and you're not going to be married to that person anymore.
That's the reason we refinance. That's the one of the main reasons.
Absolutely. And I think it's just something that you need to insist on. If you are leaving the house, do not give them a quitclaim deed and say, hey, I've kind of like washed my hands of everything with this transaction, because you haven't. That's just, sitting there ready to jump up and bite you. And I can tell you from personal experience, I did this. And so far, knock on wood, my ex has never had like a late mortgage payment or anything like that. But I've been turned down for a couple loans where they said, hey, you make good salary, but you've got this like $3,000 extra obligation. How are you going to pay us back? And I said, well, I'm not going to pay you back, because if I had that extra $3,000 that I had to pay every month, I couldn't even put food on my table or eat or anything like that. And they just said, hey, sorry, it doesn't matter. You're obligated to pay that, so we have to put this in your qualifying ratios. And
I can add in on that. It's considered, even if they pay the thing like they're supposed to, it's considered a contingent liability, and it can be counted. Even if you've got a special warranty deed and you've handled all the paperwork the right way, if you're still on that mortgage, it's a contingent liability that the mortgage company has to consider. And there are rules about that. And again, I'll plug again, for more information about that, feel free to call us. Okay.
It's not just your mortgage either, Mike. I wanted to point out, I couldn't get a signature loan at my local credit union. That's how it personally impacted me. That's something that will potentially carry over until that loan is paid off.
Okay, so after my divorce, can I get a new mortgage while I'm still listed on the old mortgage? Well, we just kind of answered that. So I think if we wanted to just go through that, there's some conditions where yes, you can, no, you can't. I think I talked that it's got the contingent liability stuff.
Yeah, I mean, just that late payment on that house can dog you, for a long time if you don't make sure that you get off released from that liability.
Right. Okay, well, I don't want to beat that dead horse there. So can I buy another house before my divorce is final? Now, I have to totally give this one to Gabe because I have no idea about this one.
Well, that's a big, big caution sign. And the answer is maybe, but you're still going to have to qualify on your own mortgage on your own merits for the other one. And we talked about that the same as it would be any other time. You know, Texas is, this is really important to keep in mind, and I mentioned this before, but Texas is a community property state. So what that means is if you buy another house while you're going through a divorce, you know what someone, Mike, that's going through a divorce is?
It's not mine.
Someone that's married, right? So that means that this current person that you're married to, this person that you're getting a divorce from, that you're not going to be together with, is going to have some ownership in that house. And what that means is they might have to sign some documents, even if they're not on the loan, even not to qualify for the loan, they might have to sign some documents to perfect the lien as far as the deed of trust goes. And then you're going to have to dump that property into the divorce settlement and the final settlement, and then that person is going to have to sign off. So, you know, depending on how the divorce goes, if it's completely amicable, you know, that might be something you could consider, and your spouse will have to show up and sign a title, and then they're going to have to sign a deed after the divorce is final, because, you know, congratulations, you just bought a house with the spouse that you're in the process of divorcing. Be careful.
That does not sound like a great idea of, after you divorce somebody, to have them included on your new house. So
right.
I'm going to suggest that they try to avoid that.
But, you know, for some people, you know, it makes sense. They need somewhere to live. They need somewhere to be, and they're in an amicable split. So it can work, but like I said, be careful, be cautious.
Okay, this is towards the end. We want to help, and so how can we help you is really what the question is. How can you help me? We'd love to be a resource for you guys in answering your questions, particularly with Gabe joining our staff. It gives us almost a magnification of the opportunities that we offer in expertise. Dramatic expanse there, and we'd love to be able to help you. So we can help you determine what your house is worth. We can help you answer questions that you might have, and the questions that we asked today might be just a tip of the iceberg as to what's out there. But I want to really thank Gabe for being here with us today. We're going to try to attack multiple legal type questions that relate to real estate over the coming weeks and months and hopefully years, so that we can be a resource for you guys. So Gabe, as we're finishing up, any last comments?
Yeah, I just wanted to reiterate what Mike said, in that although I am an attorney and although I could still practice in the state of Texas, I don't choose to do so. So what I'm going to do is I'm going to help you with, kind of explain exactly what's going on if you call and help, and then I can help get in touch with a professional that can handle that does that full-time, day in, day out, because we don't want people to go and get taken advantage of by anyone. We want them to have like kind of the knowledge and understanding of how to ask the right question, but we also don't want to get out over our skis and do something that we don't do every day.
Well, and what we want to do is we are in the process right now of developing a group of resources for specific things for attorneys that we think are honest and trustworthy and wise in the sense of wisdom for helping people through these traumatic times. So anyway, I'd love to hear from you. If you haven't decided on who you're going to use, if you're going to go through that, or if you're even going to do it, but that is kind of where we're going from here. Finally, I just want to remind you that we are the Kingwood Mortgage Guys. We're here to help. We have expanded the way that we can be of service today, and of course with me, I'm a credit specialist, and with Gabe, he's a legal specialist. So anyway, thank you again for taking the time to watch this presentation. If you have any questions, I want you to feel free to call us at 281-348-9899. Gabe is on that directory, and of course me, and the only reason you'd ask for me is if it was mortgage or credit stuff. For Gabe, it's legal and mortgage stuff. So that's it. Gabe, you want to finish it for us?
I just am excited for the opportunity to work with Mike. As president of a title company, I can tell you I worked with hundreds of lenders, some good, some bad, and some indifferent. But the reason I'm working with Mike is because he was about as good as I ever worked with, and I'm really excited to be learning from him and hopefully kind of expand some of the things he can do to help his people. And we're here to help. We'd like to help you.
I appreciate that. Okay.